It has been the proverbial bloodbath on Dalal Street. India's stock markets witnessed a meltdown, with the Sensex closing down by 2.7%, losing over 2,200 points. And the Nifty too down by 2.7%, losing over 660 points on Monday, the 5th of August. It's the biggest sell-off since the one on the 4th of June, when India's election results were announced. Around 15 lakh crore rupees of investor wealth was wiped out. These are the factors that caused the crash. Number one, recession fears in the US. Economic data coming from the US economy have spooked investors in the US and across the world. First, it was the weak manufacturing data, and then it was the weak jobs data for the month of July 2024. July's payroll data showed that the US unemployment rate jumped to a near 3-year high of 4.3% last month against 4.1% in the month of June. July marked the 4th consecutive monthly increase in the unemployment rate in the US. The data added to concerns that the US economy was slowing more rapidly than expected, and that the US Federal Reserve had erred by keeping interest rates steady at its policy meeting on the 31st of July. According to a Bloomberg report, Goldman Sachs economists have increased the probability of a recession in the US to 25% from 15% in the next 12 months. The US stock markets have been falling for 2 consecutive days. The US markets aren't the only ones in a slump. As a domino effect, Asian markets have been crashing too. The Nikkei and Topix, the leading indexes of stocks in Japan, crashed by a staggering 13%, marking the worst drop since the Black Monday of the year 1987. Kospi, the benchmark index of the stock market in South Korea, had its worst session in 4 years. It was down by 5%, prompting trading curbs for the first time since the year 2020. The Taiwan stock market witnessed its worst fall in 57 years. On Monday, Taiwan's benchmark stock index, the TAIEX, plunged by a record 8.4%. Another important factor causing the sell-off is the rising tensions in West Asia, especially after Israel's assassination of Hamas chief Ismail Haniyeh, which has led to an escalation in the Gaza conflict, prompting fears of an imminent war. Not just global factors, there are local factors at play too. Corporate earnings released by Indian companies for the first quarter of the current financial year have been weak, falling by around 2% as compared to last year. Bear in mind, the rally in India's stock market so far have been supported by strong corporate earnings. And finally, stocks in India are currently at sky-high valuations at the moment after what has been an unabated bull run over the last couple of years. And experts say that the market is ripe for a healthy and imminent correction.